You're a Lloyd's underwriter. It's January 9th, 1912. A broker named Willis Faber walks into your coffee room at Lloyd's of London. He drops a slip of paper on the table. On the slip is a single word that everyone in the room has been reading about for 2 years. Titanic, the most talked about ship in the world, 26,000 tons, 882 feet long. 16 watertight compartments. The White Star Line is calling her practically unsinkable. The insurance broker is asking you to underwrite the hull for £1 million. You pick up your quill pen. You add your name to the slip. Within 3 days, 72 other underwriters at Lloyd's will do the same thing. 3 months later, the ship you insured will be at the bottom of the North Atlantic. Now imagine, you are the man who has to write that check. This is the story of what actually happened at Lloyd's of London in the 30 days after the Titanic sank, and how the insurance industry, at the exact moment its reputation could have been destroyed, chose instead to become a legend. So how did Lloyd's of London handle the largest marine insurance claim in the world? And why does this one moment still shape how modern insurance companies behave today? The answer involves the fastest catastrophe payout in Lloyd's history up to that point, a network of undersea cables and wireless telegraph stations, a rare Renault automobile at the bottom of the ocean, and a $50,000 life insurance check that got delivered to a widow in Philadelphia. Once you know how this played out, you will see why Lloyd's became the global gold standard for insurance and stayed there for the next century. Let's start with the numbers, because the numbers are extraordinary. On January 9th, 1912, the broker Willis Faber & Company came to Lloyd's to place 2 insurance policies. One on the Titanic, one on her sister ship, the Olympic. Both belonged to the White Star Line. The hull and machinery of the Titanic alone were insured for £1 million. That was the largest single marine risk ever placed at Lloyd's up to that moment. In today's money, it would be worth about $150 million, though the ship's actual construction cost was closer to $7.5 million. The Titanic was, by most estimates, actually underinsured. The premium was surprisingly low, just £7,500 for 12 months of coverage. That works out to about 0.75% of the insured value. The market considered this ship a good risk. She was new. She was modern. She was, everyone believed, safe. 70 Lloyd's syndicates and 12 insurance companies signed the slip, each taking a share of the £1 million risk. Individual underwriters accepted portions ranging from just £200 up to £75,000. One holdout, British Dominion's Marine Insurance, refused to join the syndicate. Its underwriter said the Titanic sat too low in the water. He was, in retrospect, a man with very good instincts. Here's where it gets genuinely interesting. On the night of April 14, 1912, at 11:40 p.m. ship time, the Titanic struck an iceberg in the North Atlantic. 2 hours and 40 minutes later, she was gone. 1,500 people died. 705 survived. The wireless telegraph age was still very new, but the Titanic was equipped with the latest wireless equipment, and her operator, Jack Phillips, sent distress signals until the very end. The first station to pick up his signals was at Cape Race, Nova Scotia. That station was one of Lloyd's own network of communications posts, built specifically to keep London informed about the state of world shipping. Within hours, Lloyd's knew what had happened before most newspapers did. On the afternoon of April 15th, the lutein bell rang inside Lloyd's underwriting room. The lutein bell is the ceremonial bell used at Lloyd's since 1858. 1 ring means a ship has been lost. 2 rings mean a ship has arrived safely. On that afternoon, the bell rang once. All trading stopped. Every underwriter in the room knew what they had just heard. The largest marine insurance risk ever placed had just come due. Now here is where things get really wild, because what happened next was extraordinary. Within 30 days, Lloyd's paid the entire £1 million claim to the White Star Line in full. Before the wreck was located, before the official inquiries in Britain and the United States had finished, before the courts had ruled on liability. This was unprecedented speed for a marine disaster of this scale. The claim represented about 15% of all the marine claims Lloyd's paid in 1912. It was roughly 20% of the total capacity of the entire Lloyd's marine market that year. The syndicates absorbed the loss and kept trading. The system worked exactly as it was designed to work. Risk had been spread across 70 underwriting groups, none of whom took a hit large enough to destroy them. This is the insurance principle at its purest. Many people share the risk so that one catastrophe does not destroy any single participant. The story does not end with the hull. The cargo on the Titanic was insured separately, also at Lloyd's, for approximately $420,000. In today's money, that is about $11 million. The cargo included some fascinating items. There was a 1912 Renault Type CB Coupe de Ville automobile owned by a first-class passenger named William Ernest Carter. Carter and his family survived the sinking. His car did not. When he returned to America, he filed a claim for $5,000 for the lost automobile. Lloyd's paid it. It was, quite possibly, the only insurance claim ever paid on a car destroyed by an iceberg. There were also 3 racehorses on board, a rare jeweled copy of the Rubaiyat of Omar Khayyam that had been sold at auction in London for £400, and several oil paintings. Every cargo claim was paid. Then there was life insurance. The wife of John B. Thayer, a prominent Philadelphia businessman who drowned when the Titanic went down, received the largest single life insurance payout of that era, $50,000. That was mostly written by American life insurers, not Lloyd's, but it was another example of the insurance industry doing exactly what it had promised to do. Interestingly, Mrs. Thayer died on April 15, 1944, exactly 32 years to the day after her husband. The life insurance industry paid out more than $1 million total on Titanic passengers, a huge sum in 1912. Here is why all of this still matters. The Titanic was not the first great insurance test of the modern era. 6 years earlier, in 1906, the San Francisco earthquake and fire had produced the same kind of moment. A Lloyd's underwriter named Cuthbert Heath sent a famous telegram to his San Francisco agent instructing him to pay all our policyholders in full irrespective of the terms of their policies. That decision cost Lloyd's a fortune, but bought Lloyd's a reputation. 6 years later, when the Titanic went down, Lloyd's did it again. Pay the claim. Pay it fast. Pay it in full. Do not argue about clauses. Do not delay. The industry had a chance to protect its money and destroy its reputation, or protect its reputation and pay a lot of money. It chose reputation. And the choice paid off for the next century, because from that point forward, Lloyd's became the name people trusted when the risk was too big for anyone else to touch. The 1915 sinking of the Lusitania, the Hindenburg fire of 1937, the satellites that Lloyd's began insuring in the 1960s, the oil rigs, the pharmaceutical trials, the Loch Ness Monster. All of it flows from the same basic idea. When something big happens, Lloyd's pays, fast, in full. So the underwriter who signed the Titanic slip in January 1912, and the broker who placed it, and the ceremonial bell that rang on April 15th, and the syndicates that absorbed the loss, are all part of the same story. They are the story of how an insurance market chose to prove what it was for, at exactly the moment when it could have chosen not to. That decision is what made Lloyd's the insurance capital of the world for the next 100 years and counting. Every modern policy on every ship at sea, every airplane in the sky, every satellite in orbit, and every strange one-off risk that no one else will touch exists on the same principle Lloyd's demonstrated in the 30 days after the Titanic went down. There is a truth underneath every insurance company that has ever survived a real catastrophe. The moment of the payout is the moment when the industry either exists or does not exist. Everything else is just paperwork. The Titanic taught the modern insurance world what that moment looks like, and Lloyd's showed the industry how to meet it. The ship is gone. The underwriter is gone. The lutein bell is still hanging in the Lloyd's underwriting room today. And every 30-day claim that Lloyd still pays fast is a direct descendant of that moment in 1912.